This video is sponsored by PelucidFX.com. Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Now let's take a look at the gold market. On the gold market, guys, in reality it's nothing really new. Market looks heavy right now, and as we have discussed on current trading week, some trading session in the same manner to the downside will show the bearish dynamic pressure. And now, as you can see, although market has formed stop grabber here and here, that's why, guys, I personally do not like to rely on such sort of the grabbers that stands against of the major action. I prefer to trade the grabbers in the direction of the previous trend. And you can see that market by this action right now has erased both of them. Theoretically, price now stands at the edge, so chances still here that probably market really could show the action to the upside. But the pattern that's now forming on the daily time frame chart is a bearish dynamic pressure. And the target of the dynamic pressure stands right here, below these lows. So usually when the dynamic pressure forms, market shows the acceleration to the downside in the direction of the pressure and taken out of the nearest extreme point. That's the minimum target. It doesn't forbid market to continue move lower, because we should keep in mind and recall that recent action on the gold market is the bearish stop grabber on the monthly chart that suggests the challenging of the 1170s lows. That's what we have in the big picture. And the multiple bullish failures that we have seen within the previous months, I speak about a lot of patterns, the double bottom and the bread and butter on the weekly time frame chart, and other bullish patterns that have failed, that we expected to see, but all of them were failed. Really doesn't increase the chances on the upward action in the gold market. Also, guys, do not forget that currently market stands in the bearish seasonal trend that will last till mid-August approximately, till the end of the summer. Well, taking into consideration all these moments, I don't want even to mention the pivot points. This market stands below the yearly pivot point. By the way, this reversal down with the monthly grabber has happened right at the yearly pivot point. That's also a significant moment. Market stands below the monthly pivot point, so it's very difficult in the current situation makes any bet on the possible upward action. I mean, in the medium-term perspective, on the weekly, on the daily time frame chart, because chances right now stands on the side of the bearish continuation. That's what we have on the daily time frame chart. On the 4-hour time frame chart, we could try to take the scalp long position if you would like to do this. So if we'll take a look at the 4-hour time frame chart, here is our patterns. When I said that market now stands at the edge, you now see what I'm talking about. So as I said, we have here some skewed head and shoulders pattern. So that could be the left shoulder, head, right shoulder. That's the edge, because that is the bottom of the right shoulder. If market will show the acceleration below the weekly pivot support one, that will probably will erase the possibility of upward action and erase the possibility of the pairing of the head and shoulders, and will lead to acceleration to the downside, taking out of these lows, I suspect this. The one reason that we have right now with the taking the long position is the agreement of this A, B, C top pattern, D, the crucial point of the head and shoulders, because if market will not start upward action right from here, it will not start the upward action at all, because that's in fact last area where you could take the long position if you would like to do this. The major attractiveness tool major advantage of this situation is that you could place very tight stop, slightly lower than the weekly pivot support one will be sufficient, because if market will pass through it, it should pass through the target of the ABCD. Okay, it should pass through the agreement, it should pass through the weekly pivot support one, and then if this will really happen, hardly market will stop here and turn to the upside. It's probably will taken out of this loss. That's why having the at least theoretically we have the context for this scalp bullish trade, and possibility of placing the stops very close make this situation attractive if you like to take the additional risk, because that's here is mostly looks more like a gambling rather than really logical trading. Sometimes, guys, I take such sort of the trades, but mostly due to the reason of the tight stops. When you have the situation when you have significant support area, you could place the tight stop, and you effect stands at the edge of the pain or gain situation. If you will either take the pain, if market will pass through it and continue move lower, or if you will have the gain, you will really get the significant profit, because if market really turns to the upside right from here, even A, B, C, bottom, D pattern that based on these head and shoulders will lead us to the 1350 area, right to the upper border of this consolidation of this resistance area at minimum. Another pattern that could be formed here is this bottom line. Okay, this left wing could be right wing, the target stands approximately at 1350 area, right in the 618 resistance. That's the second possibility. So decide by yourself. Theoretically, you have the reasons to take the position, because you have the Gartley's 222 buy, you have the potential head and shoulders. Market now stands at the support. If the support will, this setup is really simple. If this support will survive, will hold, market could reach significant upward potential, significant upward target. If market will fail, well, this is the chance to place very tight stop, so your loss will be very small. So that's why some attractive moments still exist here. So that's choice is up to you, but I should warning you that this action is non-bullish, and in general this suggests the taking out of this loss and acceleration to the downside. Maybe it will happen tomorrow, who knows. Maybe if market will start shows at least some minor barons here, you could be able to place the stop to the break-even. That's also possible. Well, but in general, from the bullish perspective, from the bullish point of view, I do not like this action here, and that's very typical for possible acceleration to the downside. So let's see what will happen.